In trading, most people dream of the big win. That one trade that flips a small account into a fortune. That one entry that makes them believe they've made it. But here's the truth nobody wants to hear. It's not the big wins that make traders successful. It's the small ones, the steady ones, the ones that build consistency. Because in trading, small wins create the biggest results. Think about this. Every new trader starts with excitement. They've seen screenshots of massive profits. They've watched videos of traders showing luxury cars and million-dollar days. And so they believe that's what trading is about. They open the charts. They risk too much. They chase that jackpot trade. And yes, sometimes they get it. Sometimes they flip an account in one night. But what happens next? Greed sets in, discipline disappears, and the market takes it all back and more. That's the cycle of inconsistency. It's the trap that kills more accounts than bad analysis ever will. Now compare that to the trader who focuses on small, steady results. Maybe it's 10 pips a day. Maybe it's 1% a week. It doesn't look exciting. It doesn't go viral on social media. But that trader is building something much more powerful: momentum. Each small win tells their brain the plan works. Each controlled profit builds discipline. Each consistent action stacks up just like bricks in a wall. This is where psychology comes in. Small wins don't just grow your account, they rewire your mindset. They remove desperation. They remove fear. They replace gambling with patience. Let's put numbers on it. Imagine you start with $1,000. If you chase a big win, you might make $500 in one trade or lose it all. But if you make just 2% per week consistently, what happens? At first, nothing dramatic. $1,000 becomes $1,020, then $1,040. But after a year, that $1,000 has nearly doubled. After 2 years, it's grown far more. That's the compound effect. It's invisible in the short term, but unstoppable in the long term. This is why small wins are the real big wins. So why do most traders ignore this? Because the human brain is wired for instant gratification. We want rewards now. We want proof immediately. That's why people jump from strategy to strategy, system to system, always looking for the fast lane. But trading is not a lottery ticket. It's a skill. And skills are built through consistency, not luck. Most traders overestimate what they can achieve in a week, but they underestimate what they can achieve in a year of steady trading. Consistency is more than just numbers on a chart. It's a mental edge. When you trade consistently, you reduce decision fatigue, you build trust in yourself, you no longer ask, will this work? You already know it does. And here's the key. Consistency creates calm. Instead of being shaken by every candle, you stay focused on your process. Instead of gambling, you're executing. That calm state is where great trading decisions come from. So how do you build consistency as a trader? Step 1, master one setup. Don't try to trade everything. Find the pattern, the structure, or the strategy that makes sense to you and make it your weapon. Step 2, risk small. Never risk what you can't afford to lose. Treat trading like a business. Keep your overhead low, your capital safe. Step 3, focus on risk to reward. It's not about how often you win, it's about making sure your wins are larger than your losses. Step 4, journal every trade. This is how you see patterns in your behavior. This is how you turn mistakes into lessons instead of repeating them. Step 5, measure progress over weeks and months, not single trades. No business is judged on one day of sales. Why should trading be any different? Examples in action. Picture 2 traders. Trader A goes for the jackpot. One week they're up 100 pips, the next week they've blown their account. They keep starting over, always in the same cycle. Trader B plays the long game. They target 10 pips a day. It doesn't look impressive in the moment, but at the end of the month, they're plus 200 pips. At the end of the year, they've built a track record. And most importantly, they've built trust in themselves. Which trader do you think survives? Which trader do you think attracts investors, capital, and long-term growth? Always the consistent one. The emotional payoff. Here's the part most traders overlook. Consistency doesn't just grow your account, it grows you. It gives you patience. It teaches you emotional control. It builds resilience when trades don't go your way. It creates the kind of mindset that can handle pressure in markets and in life. Because once you've proven to yourself that consistency pays off in trading, you start to apply that same mindset everywhere else. Fitness, business, relationships.
all built on the same principle. Small wins, repeated consistently, lead to big results. The truth about success in trading is simple. There is no shortcut. There is no magic strategy that will turn you into a millionaire overnight. Success in trading belongs to the traders who can show up every day, follow their plan, and keep stacking small wins. That's the difference between the trader who burns out and the one who builds real wealth. So the next time you open your charts, remember this. Don't chase the jackpot. Don't gamble for the big one. Focus on the small, repeatable wins, because those wins build consistency, and consistency is what builds accounts, builds confidence, and builds traders. In the end, trading isn't about one big win. It's about showing up day after day and letting small wins create your big results.